Social Security and taxation. That's what we're going to talk about here today on the Heritage Wealth Planning YouTube channel. So if you want to know about Social Security and taxation, you've come to the right place. So if you like what we say here at the Heritage Wealth Planning channel, don't forget to subscribe down below and then go ahead and hit the notification bell to be notified for future content because we do at least a video a day. So let's dive right into this. I'm going to share with you directly the Social Security Administration itself, SSA.gov, benefits planner, income taxes, and your Social Security benefits. And what we'll probably do is run over all these things in the future videos, retirement, disability, survivors, and calculators. Now, remember this, I did this in my book, talked a lot about income tax and Social Security. In fact, my last episode I did, we talked about this as well, the tax bomb in your retirement accounts. But I do want to read it directly. It's not a long page here, but let's go. Some of you will have to pay federal income taxes on your Social Security benefits. This usually happens only if you have substantial other income in addition to your benefits, such as wages, self-employment, interest, dividends, and other taxable income that must be reported on your tax return. They don't say tax-exempt interest, though. And tax-exempt interest is included in your modified adjusted gross income, all right? And your modified adjusted gross income is everything you make plus your tax-exempt interest. You'll pay tax on only 85% of your Social Security benefits based on the IRS rules. If you file a federal tax return as an individual and have combined income between $25,000 and $34,000, you may pay taxes up to, you may pay tax on up to 50% of your benefits. More than $34,000, you may pay tax on 85% of your benefits. And for married filing jointly, it's 32 and 44 for up to 50% of your benefits, and over 44 is 85% of your benefits. I'm not even going to talk about, well, I probably should say married filing a separate tax return, you will probably pay taxes on your benefits. Okay, that's a lot of times married filing separately is not the best mechanism. Given the new QBI, qualified business income, where you have the 199A deduction, that 20% deduction, that opens up a different possibility for filing a separate tax return for married filing separately. We're not going to talk about that here today, but look, your adjusted gross income. See, I don't know why I don't say that here. They say, in addition to your benefits, substantial income too, by the way, they say in such as wages, self-employment, interest, blah, blah, blah. Your adjusted gross income plus non-taxable interest plus 1/2 your Social Security benefits equals your combined income. So look, your combined income, I call provisional income, frankly. I guess combined income is what the Social Security calls it. But the term provisional income has actually found its way into financial planning vernacular. No one uses combined income. But anyway, you should. That's fine. Either way, combined and provisional income are synonymous. Your adjusted gross income plus non-taxable interest plus 1/2 your Social Security benefits equals your combined income. And if your combined income, married filing jointly, is above $32,000, you will pay some tax on your benefits. If your combined income, if your individual is above $25,000, you will pay some tax on your benefits. Each January, you'll receive a Social Security benefit statement, a SSA.1099, showing the amount of benefits you received in the previous year. You can use this benefit statement when you complete your federal tax return to find out if your benefits are subject to taxation. They'll tell you how you can get a replacement document. If you do have to pay tax on your Social Security benefits, you can make quarterly estimated tax payments to the IRS or choose to have federal taxes withheld, which is probably what I would do. And then they talk about retirement benefits booklet and Social Security publication, IRS publication 915 for Social Security and equivalent railroad benefits. So there you go, straight from the horse's mouth. How do you pay taxes on your Social Security benefit? It is simple. You take your combined income. And what is your combined income? Is your AGI, all the money you've made, all the taxable income you made, all the money you made, plus your non-tax interest, plus your Social Security, half your Social Security benefits. So you got $50,000 pension, you got $50,000 from Social Security, you got $50,000 from tax-exempt interest. So 50, 50, 50. Your combined income is what? So $50,000 from pension, $50,000 from Social Security, and $50,000 from tax-exempt interest. Your combined income is $125. I heard you say it. That's exactly correct. Because you take the 50 from pension, your 50 taxable tax-exempt interest, and you take half of your Social Security. Your combined income is going to be $125. And I can tell you right now, I haven't done this a million times. You take your trusty calculator and you do $125 or you do 50%, 50,000 for your Social Security benefits, times that by 0.85, you're going to pay, $42,500 of your Social Security income will be subject to taxation. And I'll do another. Actually, what's the next chapter I got to talk on? The next chapter I'm going to do on this is probably my favorite one. Yeah, how one widow paid $10,000 in taxes while another paid nothing on the same income. So we're going to talk about that next time in a different episode. So stay tuned. Stay tuned. As always, subscribe, bell for notification, click or comment below. I'd love to hear your comments. And finally, thumbs up. Always helpful. Thumbs up. And of course, share the episode too. Lastly, go to heritagewealthplanning.com, heritagewealthplanning.com for the blogs that we do. See you next time. Thanks, guys.